Hi everybody, Marco Carballo here from businesscreditblogger.com. Today's video we're going to talk about business lines of credit. We're going to talk about how to get unsecured cash credit. There's actually 4 types of business lines of credit that we're going to talk about in this video. So if you're looking for lines of credit for your business, whether you're a startup or an existing business, and you're looking for cash credit, this is the video for you, because we're going to share with you how to qualify for each of these types of lines of credit. And more importantly, we'll share with you how they actually work. So let's get started. Now, of course, you hear a lot about business lines of credit everywhere in the internet and videos, how to get lines of credit. This video is going to break down and hopefully clear all the confusion as to getting lines of credit for your business. But specifically, we're talking about cash lines of credit. I'm not talking about supplier-based credit or vendor credit or retail credit. Those are lines of credit that you hear about, but you can't use that for cash. So if your goal is to get cash for your business, you need it for whatever business purpose. We're going to cover the 4 types of business lines of credit in this particular video. Okay, so first and foremost, a business line of credit is actually a predetermined credit limit that you get, whether it's from a bank or an alternative lender or a credit card issuer. They give you a credit limit that you can use whenever you need it. So it's an open line. So that's the beauty of that for you as a business owner, is you may not need the money right now, but you want to have that assurity that you have access to capital when you need it, whether it's for an unforeseen expense, whether you need to purchase inventory, whether you have a seasonal business, and you just want to make sure you have access to credit when you need it, and you want to be able to have cash when you need it. So the beauty of also lines of credit is it's revolving. So if you use it, you pay it back, you can use it again over and over again. You don't have to keep requalifying to use that money. So that's another advantage for business lines of credit. Now, in this video, we're going to talk about unsecured business lines of credit, because there's secured business lines of credit and there's unsecured. Okay, unsecured, of course, is the most risk for the bank or the lender or the card issuer, because you don't have to provide any collateral as a business owner. There's nothing you have to secure that line with. Now, keep in mind, with unsecured business lines of credit, because it's more risk, you're not going to get the lowest interest rates. So if your goal is to get very low interest rates, like you want a 5%, 7% traditional business line of credit, then you're going to need to secure that line. And that's why secured business lines of credit can offer lower rates. So there's lines that, if you want to go with a traditional business line of credit, they may require a blanket lien on your assets or a certificate of deposit to secure that line. And many times you can get a line of credit for your business that's secured with no PG, because you're securing that line. The bank has collateral, which basically means that if your business defaults on that line of credit, then they can recoup it by seizing your asset or whatever you put up to secure that line. But in this video, we're going to talk about unsecured business lines of credit. Okay, so who's a business line of credit for? You could be a startup business. You could have incorporated your business today and you want to have access to capital. What are your options? We're going to cover that here today. You can be a small business. You're doing, let's say, under 2 or 3 million a year. Let's say you're doing 150,000, 250,000 a year in revenue. You definitely need a line of credit. And if you're a real estate investor and you want to have access to cash that you can invest in real estate properties, you need a line of credit. So we're going to share with you these 4 major types of business lines of credit. Let's say you want to separate your business from your personal expenses. That's very important, especially in tax time. You want to be able to have that separation. You don't want to commingle using personal credit cards for business expenses. You don't want to use your personal bank account for your business. You want to have a clear separation between you and your business. So getting a business line of credit is essential to not only have access to working capital, but also create that separation. Because remember, if you're commingling your personal credit cards with your business or personal funds with your business, then you run the risk of jeopardizing the protection that you get from a limited liability company or a corporation, because that's a separate legal entity. So you have to treat it as such. When you commingle it, then many times you can lose the protection that a corporation or LLC provides you. And let's say you want access to working capital at any time. That's what a business line of credit could do for you. You want to protect your personal credit. There's certain types of lines of credit you can get that we're going to cover here that it shields your personal credit from being impacted when you're using your line of credit. Okay, we're going to talk about, let's say you want to build business credit. That's another benefit of getting a business line of credit, and revolving money. So what do you need if you want to get a business line of credit for your company? First and foremost, if you want to create that separation between you and your business, you have to incorporate your business. So if you operate as a sole proprietorship right now, then the first thing you want to do is incorporate, whether it's a limited liability company, a corporation, etc. But you want to create an entity that's separate from you as an individual. Your company must be in good standing. So if you incorporated your business a couple of years ago, but you really never did anything with it, and now you're ready to start doing something with your company, the first thing you want to do is go to your state website where you incorporated, do a search in the corporations division for your company, look up your company, and if you see inactive, that means your company is inactive with the state. You need to pay your annual report filings up to date with the state. Okay, that's very easy to do. You contact the state, pay your annual report filing fees up to date, so your company is now active with the state. So that's very important. It has to be in good standing. Employer identification number, your EIN number. This is issued to you by the IRS. This allows you to file taxes under your new business entity. Okay, so that's another thing you need. When you get an EIN, the Internal Revenue Service issues you an EIN letter. Okay, so that letter is going to be a document that has your company name, company address, and your employer identification number. You're going to keep that document and you want to file it because you're going to need that document when, let's say, you're opening a business bank account, or when you're applying for funding. A bank may request your employer identification letter, so that's an important document for you to have. Also, your articles of incorporation, you want to have that on hand, or your certificate of formation if it's an LLC. Those are basic company documents you have to have, so make sure you have it in an accessible place in your office. Business contact information, make sure you have that information readily available and you know what that information is going to be. You want to know, this is my business address, this is my business contact phone number, this is my business email address, etc. You want to make sure you have that all established and have no guesswork. Okay, that way when you have that data, you're putting that on all your applications. You're putting on maybe a credit app, you're opening your business bank account with that information. Everything is consistent across the board. You want to have a business bank account established. So before you're getting business lines of credit, these are all the things, the basic things you want to have in place before you open up a business line of credit. So you want to have a business bank account. Should you use a national bank or a regional bank or a credit union or a community bank? It really depends on what your needs are as a business. Do you operate your business nationally? Do you need a major financial institution? Or would you rather deal with a bank that's a little bit more flexible in their lending standards that may cater to you than a credit union or community bank may be ideal? So you have to kind of weigh on the benefits of using a major financial institution or state bank or a credit union, etc. I tend to favor credit unions and community banks. They tend to think they're much more flexible in catering to your needs, etc. Now, let's first talk about the first type of business lines of credit, business credit cards. So a lot of times you see business lines of credit get up to $150,000. You see that with our funding programs. This is one of the types of business lines of credit that are very popular in the industry right now. Business credit cards can be used to make purchases and withdraw cash. So those are the two functions of getting business credit cards. So you can use it anywhere. If a card issuer issues you a business credit card, let's say it's a Visa or it's a MasterCard or American Express or Discover, you can use that card anywhere those types of cards are accepted, which is pretty much everywhere. The second function of a business credit card is the fact that you can pull cash from them. Okay, so many of you are like, well, isn't there high cash advance fees? Yes, you want to check out our video on how to convert credit cards into cash at 0%, so you can avoid high interest rates on cash advances. So you can be very creative on pulling cash from business credit cards if you need cash. I always explain to potential clients there's 3 different ways you can pull cash from business credit cards. Okay, number one is you could do it yourself. You could do a cash advance, You could use the balance transfer strategy, which you want to watch our video here up on the top of the screen that talks about how to do it strategically so you can avoid high interest rates on your cash advances. So that's number one. Number two is it depends on what you need the cash for. So if you need cash because you want to pay a contractor, or you need to pay a supplier or a tech company that they only want cash, they don't want credit cards, or they don't accept it, etc., you can convert that using a service called Plastiq. That's Plastiq. That's a company, and there's other companies like it, that will allow you to use your business credit card. They charge you a 2.5% fee typically. That's the low fee that they charge you. And they pay your contractor or tech company or whoever you want to pay in cash. So they do it through a wire transfer or ACH deposit. The beauty of that is the credit card, your business credit card, that's converted to cash, but it's treated as a purchase on your business credit card. So that's where you avoid a cash advance. You're converting your credit card into cash with that particular middle-based company, Plastiq, doing the conversion for you. But you can't pay yourself in cash, so don't do that. It has to be a separate company, separate from you. The third option you have, and this is only available to our clients, so this is a benefit when you go through our business credit card funding program, is our cash liquidation service, where you have the ability to convert up to 100% of your credit cards into cash, or up to a lump sum, whatever amount you want, and there's a 6% fee. You receive 100% of that cash in a cashier's check or deposit, and minus a 6% fee. That's called cash liquidation service. So we make that available just to our clients who go through our business credit card funding program. But that's a third option. Why are business credit cards great? Because they're great for startups or existing business credit cards, or existing businesses. So if you're a startup and you're looking for the easiest way to get a revolving line of credit for your business, because remember, as a startup, you have no history, you have no financials, you have no tax returns for the business. You're not producing revenue, or let's say you're doing very little revenue. So the easiest thing to get is a business credit card, because it's a stated program, and there's business credit card issuers that cater to startups. If you're an existing business, you may already have some business credit cards, but one of the things that you don't like, let's say, is it reports to your personal credit. Many business credit cards that you get show up on your personal credit. So let's say you want a couple of credit cards for the business that do not show up on your personal credit. You want it to build your business credit. That's where our business credit card funding program, we only get you cards that report to business credit reporting agencies, not personal credit. This is great if you want business credit cards are a great line of credit for the business, because if you want to maintain a revolving balance or pay it off, that's the beauty of credit cards, is the fact that you can pay a minimum monthly payment, which is very small, which is about 1 to 1.5%. That's why business credit cards are really popular, because it's an easier debt to service when you're carrying a balance. But you also want to be careful that that interest can compound if you don't want to carry a long balance for a long time on credit cards, because you have compound interest. But you can also get 0% introductory APR on purchases with some of the cards. Not all of them, but there's many available that do offer that. But also you can pay off a credit card every month and never pay any interest if you want, okay, and build your business credit. But also you can pay more than the minimum. So that's the great thing about business credit cards is the flexibility. You can use it whenever you need it, repay it, and use it again and again, over and over again. This also allows you to keep that personal and business credit separation. So that's why business credit cards are our first type of business line of credit you can get. I almost like to say it's mandatory as a business. You should have at least 4 to 5 business credit cards. I love our particular program because they only report to business credit. If you have some business credit cards that show up on your personal credit, you want to get away from that, because if you're any activity you do on the business, it's going to impact your personal credit utilization. It's going to impact your personal FICO scores. So that's something you have to be concerned with as a business owner, because on your personal side, let's say you have to buy a car, or let's say you have to you're applying to get a mortgage for yourself, or you need some personal financing for a student loan for one of your kids or something like that. And let's say you have a business you're operating and all that business debt shows up on your personal credit. That's going to impact you on your personal ability to get personal financing. So that's why you want to have that separation. Now, what are the requirements to get business credit cards? Typically, you want 680 or higher credit scores, depending on who you're applying for a business credit card with. With our particular program, 680 is the bare minimum, but there's other things that underwriters look at. We look at your active primary credit cards on your personal side. The reason I want you to understand how this works is when you're trying to get business credit cards for your business, the size of your credit cards that you currently manage right now on your personal side will dictate how much the card issuers will issue to your company, because they see how you're personally managing credit cards right now as an individual is an indication of how you're going to manage your business credit card. So if the highest credit limit you have on a personal credit card is $1,000 or $2,000, it doesn't show that you can handle a lot of credit on as an individual. So that's where banks and bank card issuers for business will say, well, there's just not enough there to issue you a business credit card. So let's say you have a $20,000 American Express card that's yours personally. Well, that's a great indication that you have a major card issuer that issued you $20,000, which is American Express, okay? A high credit limit, and let's say you had that for 5 years. Well, you've managed that card for 5 years, so that's where you can probably get a much higher business credit card funding projection, maybe 80 or 100,000 with that type of great history if you have a couple cards like that. No open collections. You don't want to have a bankruptcy like Citibank, American Express, Chase. Those are bank card issuers or banks that if you have a BK showing up on a report, don't even bother applying for them. They will automatically deny you. Okay, so those are certain types. There's certain type of banks that if they see any BK on there, some require you to have a 10-year discharge on a BK before they'll accept you for credit. So some are bankruptcy friendly too. But stay away from Citi, as well as there's American Express and there's Chase. They're very strict. But for our business credit card funding program, if you have a BK, it has to be at least 10 years old. Personal guarantee. The majority of small business credit cards will require a personal guarantee. So if you're a small business, you're doing under $1 million a year or less than that, you're a small business, okay? So you're going to most likely provide a PG. How do you get around the PG? You want to watch our video, Business Credit Cards versus Corporate Credit Cards. That's a video where we went into some of the cards that are in the marketplace, even for startups that don't require a PG. So watch that video if you want to know about corporate credit cards, because many corporate credit cards do not require a PG. And of course, you have to build a really big, strong business credit report. There are some small business credit cards that we list in our business credit building system that don't require a PG, but you have to have a good, strong business credit file with 15 or more trade lines, some good, decent, high credit limits, and we show you how to do that. But the way around that, of course, is to speed up the process is to go through our business credit card funding program. So what our business credit card funding program is that's where you can get 4 to 5 business credit cards issued to your business. Our funding process takes about 14 to 20 days. You're going to look at about 25 to 150,000 in combined credit limits. Now, how do you get up to 150,000 in combined credit limits through this program? Like I said, a lot of it determines how strong your personal credit is, because you're PGing the lines for the business, but they don't show up on your personal credit. They build your business credit. But this is a way to build up your business credit fast, because you're leveraging your good credit so your company can get all this credit, and now you're going to have a good amount of credit limits showing up on your business credit report. So when you want to apply for future funding with suppliers, vendors, retailers, or banks, they'll see that your business has 50, 70, or 100,000 in revolving credit. That's bank issued credit. And remember, you also want to build up your vendor credit, your retail credit, and service credit, because that shows that your business can handle short-term financing. So you want to build diversity in your business credit file. So with our funding program, you're going to get 0% intro APR, 6 to 15 months, and this will be usually on maybe 1 or 2 of the cards. You get about 4 to 5 total. We just can't guarantee. No one can guarantee you're going to get 0% on all your cards, okay? Because it's up to the bank if they want to issue that type of offer to your business. Typical rates for annual interest rates for business credit cards are 9.9 and 19.9. What we're seeing is 9.9 to 15% annual interest rate. Like I said, business credit cards are a really easy debt to service, 1 to 1.5% with our cards. They only report to business credit. This will help you establish your business credit file with Experian Commercial and Equifax Small Business. This is 4 to 5 business lines of credit reporting on your business credit report. So imagine what that'll do for you if you're a startup. Let's say you're a startup or you're an existing business and you have no credit file at all for your business. And let's say you have a 730 credit score, you have really good personal credit, and you say, you know what, let's get 5 cards for my business. We get you 5 business credit cards. They only report to the business credit reporting agency. So now let's say you have $70,000 in credit available to your business that you didn't have before. And now you have $70,000 in credit limits reporting on your business credit reports. Let's say you have 5 positive trade lines now reporting. Imagine what that's going to do for you now as a business. You're going to have a business credit rating now established for your business. You're going to have a business credit report. You're going to have 5 new banking relationships with your business. So those 5 card issuers can offer you potential credit limit increases, provided you use your account responsibly. That those existing card issuers can offer you even more cards or even other financial products. Okay, so that's what's exciting when you build multiple business relationships with banks. We have many businesses that come to us and say, yeah, I have a business relationship with Chase. We've been banking with them for a year. I have a Chase card for my business. But that's all they have. So if a recession hits or banks constrict, guess what? What if Chase reduces your credit line because the economy goes bad? What if they happen to call on your line of credit and they convert it into a loan? Because they can do that if you have an open line of credit with them. Any bank could do that if they want to call on your line. What if they close your business credit card? Then that's all you have. So that's why you want to build diversity in credit. You want to have multiple banking relationships. Okay, so if one line gets closed or reduced, you have other lines available to you, and you have multiple relationships, and banks will compete for your business. Now, another benefit of our business credit card funding program that no other business credit card funding program offers is we have cash liquidation. So you have the ability to pull up to 100% of your credit card limits from your cards for your business with no cash advance rates you have to worry about. There is a 6% fee to do that, but that's just a service that's available to our clients anytime you need it. So if we get, let's say, $70,000 in business credit card limits for your company, let's say you don't need the cash right now, not a problem. But let's say 6 months down the road, you want to buy a building that requires $40,000 in cash, and you need the cash. You can come to us, and we can pull that $40,000 from your cards for you. So that's just a benefit. Now, the business credit card funding program, if you're interested in that, you could go apply for business credit cards on your own, absolutely. But remember, the cards in the marketplace, there's over 500 of them, but 95% of them report to your personal credit. That's the beauty of our particular program, is getting cards that only report to your business credit. So if you want us to review you, there's no cost for us to do a pre-qualification review. There's no cost to you. There's no obligation to move forward. And in 24 to 48 hours, we can let you know how much in credit limits we're projecting we can obtain for you before you decide to move forward. Okay, so first thing you want to do is order your personal credit report. So you can go to creditreportengine.com. You'll want to download that in PDF format. It only costs you $1, and this doesn't cause a hard inquiry on your credit to pull your own credit report. Okay, so this allows you to order your report, download it in PDF, and then what you're going to do is you're going to complete our pre-qualification form at businessfundingreview.com. Now, once we do the review, once you upload your report, you're going to get a confirmation email, and then we're going to contact you and give you funding projections. If you're declined, we're going to let you know why. You may have excessive inquiries, or your credit file may be too thin. okay? Or your credit limits on your cars may be too low. Let's say you only have $500, $1,000 credit limits on your personal credit cards. There could be a myriad of reasons why you're declined. But if there's other types of funding that you qualify for, we're going to let you know, because we offer many types of funding, from personal loans to lines of credit to business credit cards, etc. And now keep in mind, the second, when it comes to business credit cards, let me go back real quick. When it comes to the business credit card funding, just remember, at the end of the day, this is just one type of credit that we're covering right now. And you want to have multiple access points, different types of funding. The reason why you want to do that is because each type of funding product has a specific benefit and a specific need it could service for your business, okay? So let's start with the second type of business lines of credit, is alternative lenders. So you'll see a lot of this on the internet with a lot of companies that say lines of credit, business lines of credit, etc. These are all alternative lenders that are offering it online. And you may be familiar with like On Deck, there's Cabbage, there's Snapcap, Blue Vine. These are all alternative lenders that offer business lines of credit, and you can use it to withdraw cash. These aren't credit cards, these are actual lines of credit you can pull cash from. These are different types of lines of credit compared to what you get at a bank, like a Chase or a State Bank or credit union. These are alternative lenders, and these types of lines of credit are much more expensive, okay, than a traditional line of credit. But the beauty of this type of business lines of credit is they're much easier to qualify for. They don't require a lot of documentation. Okay, so these types of lines of credit are for existing businesses. If you're a startup, this is not the type of business line of credit for you, because they look at your revenue. The underwriting is primarily based on your business revenue. They look at your bank account data, how much deposits are coming in. They look at your sales. Some of them look at even your store sales, like Amazon store sales or your PayPal sales, etc. So this is based on revenue. So if you have bad personal credit, or you don't want to go through all that documentation or deal with your bank, or let's say you already have a line of credit at your bank and you want some additional lines, but let's say you don't want to go through documentation, get some business credit cards, but also you want to check into an alternative lending line of credit, because while it's more expensive, it's great for short-term money, okay? Now, when you use these types of lines of credit from like Blue Vine, Cabbage, On Deck, etc., they only allow you to have that balance outstanding on that particular draw for 6 to 36 months. So with a credit card, you could draw your balance out for years. You could just keep paying the minimum payment. But remember, long term is compound interest. You pay a lot of money if you draw that balance. With this, they only allow you to, when you pull money off your line of credit with an alternative lender, some give you as much as long as 36 months to pay back, while some go as short as 6 months. Okay? You can use your line of credit whenever you need it, repay it, and use it over and over again. Okay? No restrictions on how to use your funds. That's another benefit for alternative lenders. Now, what are the requirements to get a business line of credit with companies like Cabbage, On Deck, Blue Vine, Snapcap? They require, number one, you have to do at least $100,000 a year in revenue as a business. That's number one. So if you're doing $20,000, $50,000, you don't qualify for these particular alternative lenders. But there is one that I'm going to share with you on the next slide that their minimum is only $40,000. So that they'll consider you for a line of credit if you're only doing $40,000 a year as a business. And I'll tell you about that in a minute. Now, time in business is another requirement. Cabbage and Snapcap, they require you have to be in business at least a year. So if you're in business 6 months, you automatically don't qualify for those. Personal credit check. On Deck, Snapcap, Cabbage, Blue Vine, they're all going to check your personal credit. Some of them do soft pulls, some of them do hard pulls, but they do check your personal credit. Personal guarantee. Even though they're using your review on your bank revenue, they're still going to want you to PG the line. So if your business closes up, doesn't pay on an outstanding line, they're going to come after you to make good on that money. So On Deck and Blue Vine have the PG. You have to personally guarantee it, even if you have good, strong revenues. Where there's some alternative lenders that have no personal guarantee, which I'm going to get into next, which is what I call my favorite alternative lender, because they don't have an age requirement. They don't have no personal guarantee either. So our best alternative lender that I recommend is bankbusinessline.com. Bankbusinessline.com is actually just going to redirect you to our preferred lender. They only review your bank account activity. So you don't have to submit any paperwork. You don't have to submit any bank statements. 100% of it's done online, which I love. Many of the alternative lenders that I talked about previously, you have to fax in your bank statements. They require other documentation. This is all done online. You sign up for your account, and they only require you to be doing at least $4,000 a month in revenue. $4,000 a month. That's $48,000 a year in revenue. So that's where the majority of all the other alternative lenders require you to be doing $100,000. This is half of that. Okay, and you can get a decision in minutes to get a business line of credit with this particular lender. There's no personal guarantee. So think about that. If you're doing, let's say, $60,000 a year in revenue, and let's say they approve you for a line of credit, they're not even having you to provide a personal guarantee. That's huge. And there's no credit reporting. This does not show up on your personal credit. This also doesn't show up on your business credit. This is what I like to call off-the-grid debt, which is really beneficial to you if you're looking to minimize debt showing up on your business credit reports, let alone this doesn't show up on your personal credit. They go up to $100,000 line of credit. Okay, so go to bankbusinessline.com, and here's how you'd apply for this particular lender. If you meet the qualifications, you register online for free. So when you go to bankbusinessline.com, they're going to take you to a registration page. And the beauty of it, there's no cost. There's no cost. There's no origination fee. If you get approved, there's no cost. The only time you're going to pay anything is when you use your line of credit. And they show you clearly on the screen, if you take out this much, this is your repayment, and this is what you're going to pay in interest. So that's what I love about this particular lender. Everything's 100% disclosed up front to you, and it's all done online. So when you sign up online for free, you log in and select the direct draw. Okay, they have another product which is invoice financing. So if you have outstanding invoices, they'll also finance your invoicing as well. So that way you don't have to wait for your invoices to get paid. But let's stick to this. Direct draw is what you're going to select. You connect your business bank account. This lender supports over 12,000 banks. Okay, so once you identify your bank that you do business with, then you're going to connect with it, and they underwrite. And this is all done electronically, which is great. And this is all secure. They're not getting access to your business bank account. All they're doing is looking at the data of what your revenues are for the bank account, deposit activity, NSFs, etc. And then what happens is if you're approved, then you log into they'll notify you via email. You log into your account, and you can decide how much you want to draw at any time. Okay? And once you draw on your line of credit, the funds are deposited into your business bank account the next business day. That's what's beautiful about it. There's no prepayment penalty either. Let's say you want to pay back your draw in a week or a month. There's no prepayment penalties either. So let's talk now about the third type of business lines of credit, is banks and credit unions. And this happens to be one of the things we get asked about so much, because when people submit their credit report to us and we say you're qualified for X amount of business credit card funding, and then they say, you know what, I just want a line of credit. I don't want credit cards for my business. I want business lines of credit. Okay, you want business lines of credit from your bank. The first question I ask is, have you applied for a line of credit with the bank you currently do business with, where you have your bank account for your company? And if they say, well, no, well, why haven't you? Because that's the first place you should go, is your existing financial institution, because you have a relationship with them, number one. Number two, they can see your activity. They see your revenues. They see how much deposits you're making as a business, how much your average daily balance is. So they're more likely to approve you for a traditional line of credit than going to a bank you have no relationship with. So banks and credit unions offer business lines of credit that can be used for purchases or withdraw cash. Now, Traditional business lines of credit are for existing business that have been in business for 2 years or more. Banks are staying away if you're under 2 years. So if you're coming to us and you're a startup and you want a traditional business line of credit, not going to happen. The reason why is the banks, you have no track record. You're the most risk. That's why business credit card funding is one of your best options, or getting a personal loan for your business is another option. Okay. Now, if you are an existing business, a benefit for a business line of credit with a bank or credit union is you can maintain a balance or you can pay it off. The minimum monthly payments on traditional lines of credit at banks and credit unions are higher than credit cards. They're around 2 to 5%. Okay, so you're going to pay a little bit more if you have outstanding balance compared to having a balance on a credit card for the business. You can use your line of credit whenever you need it, repay it, and use it over and over again. It's a revolving. That's what a business line of credit is. No restriction on how to use the funds. Now, let's talk about the requirements, because this is very, very important. Business credit cards, like I said, it's primarily based on the strength of your personal credit. Okay, unless you're going into corporate credit cards, or make sure you watch that video we talked about, because there's other criteria that's looked at. But when you're going for a traditional business line of credit, not an alternative lender, on a traditional, like you go up to a bank like a Chase or Wells Fargo or a credit union, your existing bank relationship matters a lot if you have a current relationship with them, number one. Number two, they're going to check your personal credit. They're going to pull your credit. It's going to happen. They're going to want to see 680 credit scores or higher. That's typical. They're going to want to look at your 2 years business tax returns. Okay? Why do they want to look at your tax returns? Because they want to make sure that your business can support the line of credit. They're going to look at your net profits. They want to see on your tax returns, what's the net profit of the business? If your business has a loss every single year, how do you expect a bank to give you a line of credit when your business has no additional cash flow? It's not profitable. That means it cannot pay on a line of credit. So I want to make sure you understand this. So anyone who says, just build up your business credit report, and then you can get all these lines of credit from the banks just using your business credit report. That's not true, folks. Banks want to protect their risk. Okay, they're going to want to look at your tax returns for the business. They're going to want to look at your bank statements. They're going to want to look at financials. They're going to probably check your personal credit. That's just reality, folks. Unless you deal with an alternative lender, alternative lenders are going to look at your bank deposit history. They're going to look at the revenues of the business. Okay, so I just want to make sure you understand that if you're looking more credit report based, then you're going to look at business credit cards, etc. Okay, so they're going to want to look at your 2 years personal tax returns. So even though your business has 2 years tax returns, they're going to also want to look at your personal. Okay, why? Because banks want to see if you're struggling financially, personally, if your tax returns on your personal is not good, guess what? They're going to think that's going to spill over into how you're going to be running your business eventually. So that's how they want to see how's everything being managed. Banks want to cover their risk. Now, if you don't do business with that bank that you're trying to get a traditional line with, they're going to want to look at your 6 months bank statements or even more. Okay? So not only do they want your 2 years business tax returns, 2 years personal tax returns, they're going to want to see your bank statements too, your most recent bank statements. Now, if it's a bank you currently do business with, they're just going to look at your account history that you have with them for the business. So they're not going to need you to supply bank statements because they already have access to it. Okay? Now, they're also going to want your recent profit and loss statement. Now, you're thinking, well, I thought I could get a traditional line of credit just using my personal credit report. No, that's business credit card funding, folks. I'm being completely upfront with you on how this works in getting lines of credit, okay? This is the third type of line of credit. This is traditional. This is lots of documentation. The bank's going to require a personal guarantee, and this is for unsecured business lines of credit, not secured. If you're going to secure a business line of credit with like a Wells Fargo or a Chase or a credit union, if you're securing it with assets, let's say you have a CD you want to secure it with, then you can most likely get around providing a personal guarantee for your line of credit, okay? Because it's less risk. They have collateral. You're securing the line. In this video, we're talking about unsecured business lines of credit. Now let's talk about the fourth type of business lines of credit. This is called cap lines. The SBA actually has a program where they provide small business owners revolving lines of credit up to $5 million. That doesn't mean the SBA is issuing a line of credit. The SBA has a cap lines program where they guarantee, they back that line of credit up 75 to 85%. So this allows an SBA approved lender, like a bank that's approved by the SBA, to issue this line, and there's less risk to them because the SBA is backing that line of credit up to, let's say, 85% is their cap. So the banks can be more open to issuing this line of credit because if the business defaults, the SBA comes in and covers 85% of that line of credit. Okay, so that's what the SBA program is. This particular cap lines program, there's 4 different types of cap lines programs. There's a working capital cap line program. Now, what this basically means is if you're a business and you need access to working capital, there's a program that you can go to an SBA preferred lender where it's a working capital cap line program. Now, the bank is going to want first lien on accounts receivable and inventory. So technically this specific one is secured because you're collateralizing your accounts receivable and inventory. Okay. There's a seasonal cap lines program. And that's for businesses that are seasonal. Let's say in a specific season of the year, you have to ramp up on inventory. So you need access to revolving lines of credit. That's where this particular seasonal cap lines program is beneficial for you if you have a seasonal business. Now I'm going to get into the requirements on the next slide. So I know this sounds great, up to $5 million. Wow, you kidding me? And the SBA guarantees it up to 85%. What bank wouldn't want to issue me this line of credit? But there is specific criteria you have to meet. Now let's talk about the contract cap lines. This is great if you have a purchase order. It's a big purchase order you need to fulfill, and you need the capital to fulfill that order. That's where contract cap lines come in. The bank's going to want a first lien position on the contract and its proceeds. This is to cover this is a bank trying to cover its risk. There's a builder's cap line. So this is great for builders who are trying to do construction and they need a line of credit to finish their construction project. Again, the bank's going to want first or second lien position on the property that they're building. Okay, so this is another type of business lines of credit that is available, and there are requirements. The first, for the cap lines program, you first have to meet the standard 7A requirements apply. So that's number 1. Okay, so I just want you to understand, if you didn't like the requirements that I talked about with banks and credit unions, you're really not going to like the requirements you have to meet for the cap lines program. But these are great programs if you meet the requirements, or if you have the documentation, you want to supply it, and you have a growing business, etc. Okay, but definitely check out this link. The 7 SBA goes into what the eligibility requirements for 7A, because it applies to cap lines. So first, you have to meet the standard 7A requirements. You have to be 2 years in business, at least $100,000 in revenue. Your business must operate or plan to operate at a profit, and you have to have already invested some type of equity into the business yourself. You have to have some skin in the game if you already have. And additional requirements apply with each specific program. So not only are these requirements apply for cap lines, but there's even additional requirements with each one of those types of cap line programs that you have to meet. So it's not like you have free access to use the money whenever you want. It has, like for the builder's cap line, it has to be used just for that construction project and to finish the project, etc. Now, if you want more information on cap lines program, you're going to want to do your research on it. But to apply, you have to go to an SBA approved lender, okay, to get more information on the cap lines program. So we just went over 4 types of business lines of credit. These are the 4 major types of business lines of credit. So no matter what you see out there, when it comes to cash credit, I just covered 4 of the major types of unsecured. There's plenty of business lines of credit where it's secured, like there's invoice financing that's backed by your invoices. You have asset-based lines of credit that's backed by your assets. There's vendor lines of credit, but those are all store credit that you can only use with a vendor, or you can only use with a supplier, or only use with a retailer, etc. But this is cash credit. I've went over 4 major types of business lines of credit. what it's going to take to qualify for these types of lines of credit, and we also give you some additional reference videos that you can point to. With regards to what do we offer you on this channel, why did I create this channel was to, of course, educate you, empower you so you understand how to build business credit, how to maximize your funding potential. So we've created a step-by-step business credit building system. You can go to businesscreditbuilders.org. This business credit building system is designed to walk you through step-by-step on how to ensure your company's credit ready before you start applying for credit. We give you access to vendors, suppliers, retailers, fleet cards, no PG business credit cards, what the requirements are, who to apply to. We give you those credit sources so you can ramp up and build up your business credit reports so your business becomes more credit worthy. In addition to that, we actually have funding programs where we do the work. We actually do the funding, we process your apps, we negotiate with the banks, we submit, we do all the processing, underwriting, etc., and then submit your apps to the bank. So we do business credit card funding, lines of credit, loans, personal funding. So for more information on our products and services, check out businesscreditbuilders.org, businesscreditbuilders.org. If you found this information helpful, give us a thumbs up. We'd really appreciate it. And click subscribe, because every week we're putting out new content either on our blog, businesscreditblogger.com, or on our YouTube channel or other social media networks. We're always providing value to you so you can maximize your funding potential, protect your personal credit, and become a profitable business. With that, make it a great day. We'll talk to you real soon.